How's everyone doing today? How are you, my FX3 family? We're going to talk about risk management. Hello, Adinda. Hello, Maud. Alan Boyke, how are you? Hello, everybody. Okay, so normally I give a review and opinions of what's happening in the market, but today I'm going to focus on risk management. Let's start off with this question. And this is the largest challenge in our trading. Hello, Gabriel. How many people have been right about the market, wrong about the trade? They get stopped out of a trade, and then the market goes the way they had been anticipated. Give me a Y if that's happened to you. And you'd be lying if it never did happen to you. It's called being right the market, wrong the trade. It's happened to me, continues to happen, will always happen, but we're going to look into some reasons to ameliorate that. How many people are day traders? How many people are swing and position traders? Give me a Y if you're a day trader. Give me an S if you're a swing or position trader. Mark's a day trader. Swing. Day trader. About half and half here. Almost seems to be that there are more swing traders here. Okay. I want to ask swing traders, what's your average pip risk per trade? Average pip risk per trade. Wow. Saba. Okay. So, people like Saba and your hit rate, Saba, using 30 to 50 pip stops on swing trades, what's your hit rate? You ever check it out? Winners against losers, 50%, 40%. What is it? Okay. So I have this question to pose for swing and position traders regarding stops. And this is just a philosophical statement that I'm posing to you. Here's what I say to myself. And we all want the trades that give us immediate gratification without drawdowns. And because at times our timing can be so precise, we come under the illusion that we're going to be able to repeat that process over and over again. Because I know sometimes I pull the trigger and the trade never looks back. But to me, that's the exception, not the rule. Give me a Y if your trading's like that. But then we begin to believe that we can do that all the time. And I have an expression that you can't expect perfection at the crap table. You ever hear that? You can't expect perfection at the crap table. So I pose this to everyone in here that wants to swing trade and swing trade and position trade, not the day traders, because they have to trade tighter. That if you can't be wrong for a day, how can you be right for a week? If you can't be wrong for a day, how can you be right for a week? What do you guys think of that? So that tells me that whatever pair you're trading, you have to be able to at least risk its daily average trading range. At least its average daily trading range. It's ATR. So that's my first suggestion. And if that's too much risk for your account, the next way to correct it is to reduce leverage. I think that most people try and be home run ball hitters and swing for the fences, therefore use too much leverage per trade. So I would suggest if you're right the market, wrong the trade, stopped out, but right the market, that you consider using less leverage, take the pressure off yourself. Don't try and perform with the hype that you hear on the internet. 500% returns. I can make a living off my $10,000 account. Well, I don't know what kind of living you can make unless you live in a tent with a $5,000 or $10,000 account. Because I would have to do 100% on my money every month just to pay my basic bills, right? It's not realistic. So there are hedge fund managers on Wall Street that do cartwheels and get paid major bonuses doing 25% a year. Who thinks that's realistic? Who's shooting for 100% gains a year? Multiple 100% gains a year. If you are, you're over leveraged or you're over trading. And you're putting yourself under immense psychological pressure, and you're trying to do too much with too little. An amen in the room? Well, and that would put you in the upper 10 percentile. Because you know what? 90% of people that try this blow up in 90 days. That's an industry statistic. How many people in here would like to be even? Would just like to be even. Recapture losses from the past. You're not alone. You're just the only honest person in here. There you go. Jonda would like to be even. So, my first suggestion is you have to risk at least you have to risk at least the daily average trading range if you want to be a swing trader. Take the pressure off yourself and reduce leverage. And then the most important part is knowing why you got in a trade, what was the rationale, and then if that contingency is negated, then you get out of the way. Okay, so it's important to identify the reason that is compelling you to take risk in a trade. Give me a why if whenever you pull the trigger, you have reasons, technical reasons for entering at a price. Give me a why. Great. So, once you have that reason identified, what are you willing to risk to find out if you're right? Does everyone know when if you use indicators or you use triggers, does everyone know when they take that trade, before they take that trade, where they're wrong? Some people do not know where they're wrong. Before you pull the trigger, do you know where you're wrong? and to find your risk. Do you ever consider, when you look at a chart, therefore my handle, Forex Stop Hunter, do you ever consider, before you take a trade and where you're considering placing a stop, where you believe the buy stops and the sell stops are located in the pair? Give me a why if you think that way. When you look at this chart of EG, you say, well, you know what? All the sell stops are here. And there's probably plenty of buy stops here above this high. Correct? So identify where the stops are and perhaps wait for stops to be taken out of those obvious areas and then look for your entries. Have you ever considered that? If not, one of the first things that I would recommend you do when you look at your charts and you're looking at the euro right now and you're going, well, where are the stops? I'd say that there's some stops above this high in the euro, right? That's 35.46. We've been playing with that level for a while. In fact, we're there now, so we're about to take out some of the buy stops, right? So the way it looks to me is we're getting a lot of the people that were short before the ECB are now beginning to capitulate with their stops above this high. So what I told people is wait for the weak shorts to be taken out and then start paying attention for reversals. If that's new information to you, give me a why. Hello, Maverick. Are you with Maverick Trading? A prop firm? Okay. So those are really my my suggestions for you. Of course, you always have to know where you're wrong when you take a trade, but consider less leverage. You have to be wrong for a day to be right for a week, and then start to look for where obvious stop losses are. Wait for them to be taken out or trade into them if you have reasons to believe they're going to be taken out. And then you're not just there with everyone else at obvious swing highs and swing lows, because the liquidation of short covering and long liquidation has taken place. Is that helpful to you? So, say for example, I wanted to short the pound. Okay, say I wanted to short the pound. Do you think that there are some stops above 162.60? You think there's some stops here? Think there's some stops here? Look at how many times we tried that level. So if I'm looking for short positions, there's at least two buy stops there, right, Powell? People that follow my work know I do a lot of RSI work, but I would prefer to see all the pound bears cleaned out before I would consider a short. So we're only 100, 150 pips away, and then I'd begin to look for reversal signals after the stop hunt is completed. And then I'd be looking for targets as far as where are the sell stops in the pound. I'd say that there's some here, wouldn't you? probably some under this low today, under this low, and under this low. So start to view the market, right. So start to view the market in terms of where will people get shaken out. I don't want to be one of them. So I'm going to wait for the markets to tell me something after buy stops above obvious double tops, triple bottoms have been taken out. And then if I want to fade the market, I know I don't have a lot of company where I'm placing that stop after buy stops have been liquidated and sell stops have been liquidated. Just a different way of looking at the market. And if you have technical conviction, you stay long. Say, for example, you really believe that we're going to 62.60 and you saw reasons to buy the pound, you could stay long into the stop hunt and be taking profits when the buy stops are elected. So that's just one trading technique. Another tool for you to consider. That way, you're not with the crowd. Your stop isn't just sitting there waiting to be picked off. Wait for them to be picked off and then look for your trades. Of course, I use other tools, patterns, non-confirmations with momentum indicators. But if you just started to think, where are all the stops? And do I want to add a position and have a stop where everyone else is? I think that you're going to at least, to the minimum, keep yourself out of bad trades. There are always exceptions. You know, there's a possibility that the pound just breaks down from here, but higher probability that we make a new high, clean out all the pound bulls, bears over 162.60 before a better correction happens. Well, Boyke, I used to see it happen. Yeah. I do it at times. If I think that a low or a high is vulnerable and there's stops there, I may position into it. When I was on the floor in Chicago as a runner, there would always be big roars, a lot of noise on the floor when stops were run. And I also noticed that at times it was at least a temporary high or low, and at other times a significant high and low after weak shorts are squeezed and weak longs are shaken out. Just my guess. Just what I saw on the floor. So there is an open outcry like there used to be, but I still think it happens with quants and big hedge funds. I still think they play that game. I think Canada was a pretty classic example last week. You know, there were some people that were last week picking a top in Canada here. We had one pullback, and we just blew through the stops here in Canada, diverged dramatically, and had a very nice sell-off here. So here's a classic stop hunt in USD CAD. I can't answer that. What do you mean, what are the average? Let's just say it happens. Maybe it's just a law of nature. You mean the size? Could be hundreds. There could be hundreds of buy stop orders in pound dollar right now, over 162.60. Because here's this high. So the bears got short with stops over this high. They had some success. The market rallied back up, could not take out that high. So bears have had more success. So there's a ton of stops over 162.60. I was actually surprised here that they didn't elect them. So I'm sure there's more now above these levels than there was here. Does that help? You could have all different kinds of follow through. Sometimes it'll blow through a stop and keep going. But 20, I'd say 20. People are relieved for a little while. They got out. So what you can do is wait for it to be back under that stop level for it to be a reversal. So say, for example, we're going up to 62.60. We clean out the stops. We trade 283, something like that. The next time back under 62.60, you'd have something going. Because if it was a real breakout, it wouldn't be coming back to that level. There'd be a market message in it that it's right back at where everyone got taken out. Okay? Now, I know that some of you have joined me in the live analysis room. We have a great community happening here on FX Street. And I interviewed guests. I had Matt Weller on today. And so I invite everyone to consider joining us. Oanda is our sponsor. I'm happy to be surrounded by traders better than me. And if you're having trouble with your trading, you just reach out in our community, and there will be people that will reach back and begin to share what they've learned, their trading experiences. So I want to thank FX Street for giving me the opportunity to talk to you today about risk management, and just to review it, reduce leverage, take the pressure off yourself. Don't try and make 100% a month. Be happy with what the market gives you, and kind of look at the markets and ask yourself where are the buy stops and where are the sell stops, so you're just not one of the sheeple. And with that, I have a few minutes for questions. Go ahead if you have any. Any questions for me? Going once. There's a lot of false breakouts. I think one of the false breakouts that we're dealing with might be the yen triangle here. Everyone's bullish the yen now. We broke out of the symmetrical triangle. I actually am not buying into it. The key is, say for example, they take out the yen, the pound stops at 62.60. We trade 280, 63, and then it's back at 62.60. Then I think you could say it's not a breakout. It was more likely just a shakeout. Does that help you, Fabio? Okay. I think that's an excellent year. There's a link to our community. Thank you, Maud, for inviting me to speak today. Haven't been on WebEx in a while. Thank you, Adinda, for recording this. Good hunting to everybody. Good luck. You're very welcome. You're very welcome, Abel.